You are about to hear a tremendous interview with Gerald Celente, but first, this segment is sponsored by Eurasian Minerals. Due to the strength of the management team, a rock-solid treasury, 150-plus properties in the portfolio, and an impressive list of JV partners earning in on projects such as Newmont and Freeport-McMoRan, Eurasian continues to widely outpace the TSX Venture Composite Index. Potential catalysts to propel the stock higher include current drilling at Eurasian's Copper Basin project, being funded by the second-largest mining company in the world, Vale, and Eurasian's 20% interest in the world's largest ongoing copper and gold discovery at Mount Mease. Eurasian Minerals, a prospect generation exploration and royalty company with a multi-million-dollar cash flow stream. Symbol EMX in Canada and EMXX in the U.S. This is King World News. I'm Eric King. Remember to go to our homepage, where we've already had an extraordinary interview with legendary Jim Grant. But without any further delay, here is Gerald Celente. Joining us now is Gerald Celente. He is director of the Trends Research and author of Trend Tracking and Trends 2000 and publisher of the TrendsJournal, and is considered by many to be the top trends forecaster in the world. Gerald, I have to start with gold once again this week. What are your thoughts on gold and how it's been trading?
Well, I'm in the camp of everyone else out there that really follows this, and that the paper trading, the naked shorts, are one way of buying gold and trading gold, but that's not the real market. That's the manipulative market. On the hard asset market, on taking delivery of the physical gold, it's still very strong around the world, all the reports coming in. So there's the two worlds. There's the world that's manipulating gold and the world that is buying gold. And in the world that's manipulating gold, all we have to do is look about, the beginning of the week when Ben Bernanke, the Fed chairman, came out and talked about whether or not they were going to keep interest rates low or more quantitative easing, and we saw the reaction on the street. So following that, gold spiked and then, of course, pulled back a bit, but for no reason at all, because as you're looking at the real market conditions, there is no recovery, period, paragraph. What have they dumped in, Eric? Some $17 trillion since the panic of '08 hit, between quantitative easing and dumping money into the system, and look at the numbers coming out. The recovery is tepid at best, and now you have a slowdown in China, and you have a slowdown still in Europe. It's only getting worse over there. Interest rates are at record lows. Gold should be at record highs. It's not in the interest of the central bankers around the world to have high gold prices, because if gold prices were high, then people would realize that they don't have any value in buying paper garbage. And that's all this is. They're driving down gold prices to keep their paper garbage at a saleable price so that people still believe in the failing system.
Joe, what else are you focused on with regards to gold?
Well, we're looking again at the world, at the real world out there, and the physical demand. Look what's going on over there in China, for example. This is big news that's not making the news. It came out very briefly, and you had to really be looking for it to find it. And it was from Bloomberg, and the headline read, Yuan gold trade in Hong Kong triples as currency gains cut risk. Trading in gold using the Chinese currency has tripled in Hong Kong this year as the yuan's rally to a 19-year high helps limit risk for jewelers. And they say average daily volume was 6.5 billion yuan, or 1.1 billion, in the first 5 months of this year. And that's according to the Chinese Gold and Silver Exchange Society. And this is a century-old bullion house over there. And that exceeds, by the way, the 4.9 billion yuan target set when the contracts were introduced in 2001. Now, there are two important elements of this. Number one, hey, remember that reserve currency called the U.S. dollar? Well, as the United States fights wars, China fights for business. And now they're targeting, they're going to be a threat, as well as the BRIC nations, of course, which China is a member of, that are going to challenge the dollar as the reserve currency. And when that happens, the whole story changes, particularly with gold. So this is very significant, because China is now setting up more and more avenues and resources and places to trade where you can now trade in yuan. Number two, it shows still the strong demand in the real world for gold. So it's a very significant story.
Gerald, as you mentioned there's two important points. Number one, they're going to be setting the price eventually over in China. And number two, we have this continued flow of gold west to east. Your thoughts there?
Well, again, in the West, look what's going on. There's war talk all the time. There's more talk about wars in Syria, and the wars are going on in Afghanistan. In the East, they're talking about business. And so it's a very different society. In the United States and Europe, it's in a state of decline. And in the other countries, even though they're slowing down in their GDP rates, they're still in a growth mode. So you're going to start seeing more and more of the gold buying of the hard assets taking place over in the East and other countries outside the West. But that's only temporarily, as I see it, because as soon as the next financial crisis hits, there'll be panic in the streets, and people will be again buying gold. I have to make this 100% clear, Eric. Everything that the central banks have done, their ongoing stimulus and asset purchasing programs, has not done anything to regenerate real growth in the economy. This is only a temporary rise. So let's look at the facts one more time. We've had ongoing, massive, and unprecedented money-pumping schemes, but the employment sectors remain under pressure. Most of the jobs that have been lost over the past 5 years paid middle-income wages, while most of the new ones being created paid low wages. Why are the equity markets showing any strength at all? First of all, most of the trading is being done by hedge funds and all of these, people using algorithms and high-frequency trading. It's not the real world. The element of the real world in the equity markets are being forced into them because of the record low interest rates. In the old days, people had savings and they put them in banks or CDs. And they got very high rates of return, considering there was no risk being taken, and they would get much more out than what they put in. Those days are gone. Now, the only place where you could put your money to hope to get a return is to gamble in the equity markets. So that's propping them up as well. And then finally, as we look at the whole situation, and what's going on, let's remember that Europe is in, a good part of it, a depression. But you will never find that word written once when reporting about Greece, when reporting about Portugal, when reporting about Spain, when reporting about Ireland, when reporting about 28% official unemployment rates, they still call it a recession. So what I'm saying is that when you look at what transpired in this past week, when Ben Bernanke even hinted that interest rates might go up and that they would slow down their bond purchasing programs, the markets went crazy. Look what happened in Japan. And when on news of slowdown in China and Ben Bernanke's statements, the Nikkei dove over 7%. So what I'm saying is that the only way they can keep the economies going is by printing more cheap money, more stimulus, which is cheap money, and low interest rates. And all of that is bullish for gold.
Gerald, you brought up interest rates there extensively, and KWN just interviewed Jim Grant as well. And I was wondering, I know he believes that interest rates are the single most distorted market in the world, and that's sort of revolving around what you were just saying there. When that comes to an unwind, it's going to be disastrous, isn't it?
It has to. Look at the housing market in the United States. And I bought a building, and I got a mortgage at 2.875, locked in for 15 years. And even at these rates, the housing market rebound is tepid at best. And you look at where the growth in price points are, it's for homes over $300 million a year. So the whole lower end is falling out because there's no job growth. And then you're looking at another crisis that's building that doesn't make the news, and that's student debt. It's more than credit card debt at over $1 trillion. So you don't have to be Einstein to figure this one out. You got kids coming out of college as we're going through the season now where they're graduating. They're burdened down with $40,000, $50,000, $60,000 in debt. They're getting jobs that pay minimum wage or more, 50% of them. 50% of the jobs that they're getting, college graduates you only need a high school education for. They can't buy cars. They're living with their parents. Show me how there's going to be a housing recovery. They're not moving into the housing market. They're moving into their houses of their parents. So this is all happening with interest rates at record lows. This is the grand experiment. This has never been seen before as we celebrate the 100th year of the Federal Reserve taking over the money printing and money circulation of the United States of America.
Gerald, you did bring up the younger people that are struggling to find work, and the work is low pay that's out there. Because I've talked with Jim Grant before. I brought up earlier a lost couple of decades in Japan. Do we risk a lost generation here?
The generation's already lost. Where's the job creation? We have no manufacturing to speak of anymore in this country as we used to have. Those are the high-paying jobs. And this is very important. It's not only the jobs that we offshored. We offshored the intelligence, the skills, the technology. Do you think China or Japan, going back, you mentioned Japan, could have been high-tech in any field that they were in without the West giving it to them along with the manufacturing processes? So it's more than a lost generation. This could be a lost century if the trends aren't reversed. And the only way the trends I see it are going to be reversed are two major factors. Number one, going back to the precepts of the founding fathers of the United States, not becoming involved in foreign entanglements. The trillions of dollars spent, and it's estimated now going to be $6 trillion of the total cost of the Iraq War and Afghan War. If that money had been spent in the United States, we would not be in the trouble we're in now. We'd be truly the most advanced and continually most advanced nation on the planet. Number two is bring back the laws, policies, and regulations that made America what it was before NAFTA, when they enforced the Robinson-Patman Act, Sherman Antitrust Act, Clayton Antitrust Act, and Glass-Steagall. You put those things back in place, then you have a resurgence and a restoration of both the economy and the nation.
And as always, Gerald, for people around the world that want to get involved in the Trends Journal, how can they do that?
TrendsJournal.com, TrendsJournal.com. And remember, Eric, we know that people are having a difficult time. So there's a discount request page over there when you log in, and so that we try to give the Trends Journal to everybody so they can prepare for the future.
Gerald Celente, director of the Trends Research and author of Trends Tracking and Trends 2000 and publisher of the Trends Journal. Thank you for joining us on King World News.
Hey, thank you, Eric.
Be sure to tune in as we will continue to release interviews with the top people in the world throughout the week. Also, make sure to check out the King World News blog.